Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment and self storage expert Andrew Abernathy. Now, Andrew is the chairman and founder of Abernathy Holdings, a Class A self storage development firm that has capitalized on vertical integration from inception to completion, all the way through to the day to day operations. Andrew began investing at the age of 13 with only $4,000. And now, Andrew, what age are you at today? I forgot to ask you that. Are you
30.
29, 30, 30? Okay. So
Yeah,
now at the
30.
age of
Gosh.
30, yeah,
Yeah.
he has turned that $4,000 into an investment company with more than 100 million in assets. And so, guys, it's my honor to welcome back Andrew Abernathy to the show. How's it going, my friend?
I'm good. I appreciate you having me on again. It means a lot.
Yeah, 30. So I had some notes here from when we had you on the show the last time. So I had to ask you about your age. I was looking back, it was like 2022. And so well, good deal, man. 3 years have gone by, or at least two and a half from last time
Yeah.
we had you on. And last time we had you on, it was right in the midst of COVID.
Yep.
The world did not end. We continued on, and real estate, at that point was thriving. There's still opportunities today. In fact, different types of opportunities, as we were just talking about. I think some more distressed, not necessarily deals, but more distressed situations that have presented some good opportunities. It sounds like for both your team as well as ours. And so
Yep.
super excited about that, and hopefully more of those to come. But again, it was a night and day difference, 2022 to the world we're in today in 2024. So with that, Andrew, excited to kind of dive into what you're up to today. But let's back it up a little bit for those that maybe hadn't listened to the prior interview, haven't heard you before, don't know who you are, don't know your story. Maybe tell us a little bit more about yourself and how you found your way into the world of real estate.
Yeah, of course. So I'll keep it brief, but I grew up in North Dakota, family farm, six siblings. And so started out, we started the farm in 1901, not me, of course, but descendants. And so I took that over with my brother in 2010. And for a few generations, that's what we did. Farmland was the real estate investment, and we farmed. That was it. And in 2009, roughly with that 4,000, I wanted to diversify and do things outside of the farm. So we did some multifamily and then some other things and other things. And next thing you know, by 2017, I was a little bit too diversified. I was in various different real estate types, HUD buildings, commercial properties, apartments. And a mentor of mine at the time said, you need to focus down and be the best at something. And so we harnessed down into self-storage. But to go through that journey of acquiring, I had to start raising money at a young age because 4,000 was hardly enough to make the change. So I turned 4 grand into about 80 grand and just some kind of one-off deals, some stock market stuff, and then started raising money from farmers in the area.
That's
And
great.
yeah, when I went to college, had about 10 million raised, and then quit college a year or two in and had about 20 million raised by then, and we've raised hundreds of millions to date. But it's been a fun journey.
So let's back up a little bit. Come on,
Yeah.
so we're putting the math together. Age of 13, right? Like you start investing. Like help me understand the mindset of a 13-year-old farmer. Obviously, your family, just from having a generational farm, like there's a business mindset there. It just
Yeah.
and I'm sure that that got passed down generation through generation, and like you were involved in a family business, so like you saw a different perspective maybe than I growing up. My parents
Yep.
both worked, and had corporate jobs, and just a very different world and upbringing. And so I could tell you that at the age of 13, I was more focused on riding my BMX bike around, or riding a dirt bike or four wheeler, and just staying out until my parents told me I had to come home, right? And then doing the same thing again the next day, and unfortunately having to go to school, and as soon as I got out, doing the same thing over again, right? Like it definitely wasn't thinking about, not, I shouldn't say how to make money, because I was interested in making money, but most of it was like make enough money to buy the BMX bike. I didn't know about compound interest, and didn't understand what the stock market was, or how folks made money there. It was me like, can I make the $200 that it's going to take to buy that new BMX bike or the dirt bike or whatever it might be, right? And so I'm going to go shovel driveways, mow grass, do other miscellaneous items, but it wasn't. That's a haphazard business. Like there wasn't a lot of thought put behind that, other than let's go grind the sweat a little bit, make some bucks, and let's go have fun with that money. So,
Yeah.
so help me understand the perspective of a 13-year-old that's thinking about really the future and how to grow wealth.
Yeah. I had amazing parents. very fortunate for that. At 10 years old, I started running grain cart and combine, for $5 an hour under the table. My dad always wanted to teach me how to manage money. And, I made 6,000, but 2,000 of it went into a go-kart. So I only had 4,000 left. Could you imagine how big we'd be if I put all 6,000 into this thing? It'd be crazy. But there was things, but another thing my parents did, and I actually asked to do this and they okayed it. I went out, they started sending me out to Delaware, Rehoboth Beach, Delaware when I was 14, worked at a Chinese restaurant and a bed and breakfast to kind of learn culture and just different things outside the farm. And then my dad got in a really bad accident when I was in 10th grade in high school. And that's when my brother and I took the farm over. And that was probably the biggest turning point of my life. I mean, there was a lot of things prior to that that set me up for it, but I had to become an adult pretty young. And I just wanted to make the family proud.
Yep.
So I kind of just became an adult quick.
No, that's awesome. So, again, curious, from the Dakotas to Rehoboth Beach, Delaware, to the
Yeah,
beach
still
at
random.
14. Like, what even came? Again, just trying to think of how your mind worked at the age of 14. Of like, I want to go here across the country to this. To most people that are listening here, like, I actually know Rehoboth because I used to vacation
Beautiful
there
place.
as a kid. We lived in Pennsylvania, so the Delaware, Maryland beaches were like literally 4 hours away, and that's where we went. We took a car trip there, and that's where we spent a week every summer. And so I know it well. However, it's probably very obscure to the most to the 90% of people that are actually tuning in here listening. So again, just
Yeah.
how'd that come on your radar at that age of like, I want to go to Rehoboth, and what culture did you expect to learn at Rehoboth Beach?
Yeah, that's a good question. Well, anything outside of the farm world was culture. So,
Yeah.
my dad's brother, he lived out in Manhattan and had a summer place in Rehoboth, and he had a lot of friends. One of them that I stayed with was the senior vice president, National Fidelity Title. One was high up in American Express. And growing up on the farm, now remind you, our family farm is 15 miles from the Canadian border, dead central North Dakota. I mean, you can see the end of the world from there. And the closest grocery store city was, about an hour, 40 minutes. So it was me, my six siblings, and my parents. Our school had 12 kids in it before it shut down, and my mom was a teacher, and half the kids were my siblings and I. So, you know, your Rehoboth Beach was culture. That was a different
Yeah. Yeah.
world.
No, that's interesting. Wow, that's crazy. That is small. I mean, we talk about small town, right? But that is it. That is the true definition of a small town when your family makes up half of it. So,
Yeah, very
um,
small.
yeah. So let's fast forward. You went to school. You said you ultimately dropped out, but you'd start raising kind of capital. Even before you went away to school. I mean, what was the plan at that point in time? I mean, did you know it was going to be real estate, and you had a grandeur vision of what that was going to look like? And if so, help us, understand what that picture looked like in your head.
Yeah, so since I was 14, I was a huge fan of Warren Buffett, and I know it sounds cliche because I'm sure everybody says that, but yeah, from 14 on, I loved it. And I knew that I wanted to create a holding company like Berkshire Hathaway. That was my dream. Even if it was half the size or a quarter of the size, that was my vision. Real estate was in my blood. So I started with that. We did tack on some operating companies since then. We still have them. And I think that's something that'll continue. I think real estate, now that I've learned, so our mentor, JV partner, he's a multi-billionaire in North Dakota. And he taught me that, getting to 1 to 5 billion in real estate, it's doable, net worth.
Hmm.
After that, it's a headwind because you have an operating company that can make 30% return on assets. So every dollar it keeps and reinvests, you can make that 30%. In real estate, in order to keep up on the 20 some percent, you have to be a developer and flipping and selling and moving. Because if you keep something, you might be at 12% IRR, right? If you just so he taught me the quickest way to get to 1 billion to 5 billion, but then knowing that I'm going to have to pivot and keep the portfolio clean to maybe go more real or operating companies to keep those returns up. So
Hmm.
my vision at that time was I want a Berkshire Hathaway, and what are the steps I need to take to get to there, basically. And real estate, it's been good.
Yeah, so I know it's self storage today, but what were the before you finally landed on self storage? I mean, what was it? Where were you spending your time, energy, and effort?
So we had an equipment dealership in Great Falls, Montana. We bought that in 2015. Sells municipal equipment in the Midwest. And then the real estate side, we had a bunch of apartments we bought in Bismarck. And I got a really lucky break, because I bought all those when I was 16. And then when I was 17 and a half-ish, you use half ages when you're that age,
I
17
say,
and a
can
half.
you actually even get a loan,
Yeah.
truly a federal backed loan when you're 16?
I had to use that's when I was forced to go raise money and get a PG from a farmer. I
Gotcha.
that was the reason had to do that. And then I got addicted to it. I loved it and kept raising. But yeah, so I went, we bought, then the oil boom did hit. We were fortunate the city made us an offer. We tripled cash on cash triple in about 16 months.
Mhm.
And that was kind of the launch pad.
Yeah, fantastic. And then so fast forward, you've told me the story before. I'd love for you to share it with the listeners. So you'd mentioned the one of your mentors, multi-billionaire, also from North Dakota. I
Mhm.
believe he made his billions, at least majority of it in the hospitality space, if I recall. But
Correct.
tell me, let's share that story again. I would love to hear it again. Just
Yeah.
how you became friends and how you established that relationship many years ago.
Yeah. So Gary Thoroldson, he late 70s now, grew up in Daisy, North Dakota, small town similar to mine. And he was a school teacher, then started selling insurance and did really well at that. And then by his late 30s, had a tax issue. All this income, no depreciation. So a mentor of his at the time said, you should buy some hotels because you can depreciate all the furniture and equipment and stuff, quickly. And so he went and bought a Super 8 in Devil's Lake in Valley City. And then his money kept coming in. He met a guy that built hotels, and he's like, "How about this? You build hotels for me. I'll give you 10%. I'll take 90." So he basically started vertically integrating. He was the GC. He was moving equipment around. He was building these things for less than appraisal value. And he just went wild. He's built 500 hotels to date with no
Wow.
investors. Now, banks were different back then.
Yeah, yeah.
So, and he knows that. So, anyways, I was laying in bed when I was 22, waking up. My uncle from New York, tied back to Rehoboth, he sent me this article and said, "You know this guy?" And I'm like, "No, but I should. That's awesome." And I was in Fargo at the time, grew up 5 hours from it, so nobody there knew me by knew anything about me. And so I literally just called his office and I said, "Is Gary around?" And they're like, "No, he's not. Can I ask who's calling?" I'm like, "Oh, he doesn't know me. Name's Andrew Abernathy. Here's my number." Anyways, he called me back a couple months later and we go out and have pie at the Village Inn and just start meeting up and just building a relationship. I asked him to invest in me pretty quickly into the relationship. He's like, no, I'm good. I'm like, "Oh, okay, sounds good." And he gave me the advice. And so that was probably, to give you context, that was 2013-ish,
Okay.
2012, 2013. 2017 was when Holdings was the most, I couldn't explain to you what we did in an elevator, that's for sure. I mean, we were in commercial real estate, HUD buildings, equipment dealership. We had an insurance company in Alabama. We had all these things. And Gary at Pi that week said, "Andrew, you're good at a lot of things, but you're not great at anything." That's a good point. And so I took that to heart and I went back and did some research. I went back to Gary next week or two later. I said, how about self-storage? I said, it's a lot like hotels. So when he started in the hotels, it was the early 80s. Well, in 1970s, Marriott and Hilton started to go from an asset heavy brand to an asset light brand. They started having other people own the hotels. They put their names on it. And he was the developer owner that was kind of part of that wave. And that's how he
Mhm.
made his wealth. Well, in 2017, storage started doing the same thing. Public storage, extra space, it started doing the third party management. So I went to Gary with this and I talked about affordability issues and houses shrinking and all these things. So he said, "Let's go meet with extra space and public storage." We jump on his plane, headed out to Salt Lake City and then to California. And on the way back, he said, "This is your $1 billion idea."
Interesting. That's exciting. Yeah. So, I
Yeah,
mean,
felt
yeah.
good.
So, yeah, that gets the energy going through the bone. So, what next? What
I go
next from
home, I
that point?
liquidate everything.
Obviously, you're vibrating. You're like, oh shit, this guy
Yeah.
like he believes. I mean, this guy that I highly respect that has obviously been there, done that. Um, he believes in this plan I brought to him, and but obviously you're entangled in a lot of other things at that point in time. Um, how to
Yeah.
untangle and again find the time to get the focus necessary to act on this $1 billion idea.
Yeah. I mean, I literally landed. I think one of my talents and one of my weaknesses is I just jump into things. It's both. And so I landed, I literally started the liquidation process. We sold everything off except for the equipment dealership because we felt like there were some verticals, the equipment on our sites and all of that. So we kept that. We sold everything off. We had about a $20 million cash pile. And then we just started. Our first project was in Arizona. Um, our family's been going there in the winters for 3 generations. So it's kind of a second home.
Mm-hmm.
And then I told my wife and I said, hey, we need to move to Arizona. I'm going to build a business out there. She's like, okay. So we moved out there in 2020. So there was a little gap. We kind of started building the property, found a lot,
Yeah.
moved everything out here. And then when that started rolling, I asked Gary again, I'm like, would you be open to coming in with us? And we struck a deal. And so holdings went from 20 million and then he was coming in and I knew it was basically a deal where we'll go 50-50. So I'm like, okay, well, he's open to doing a lot. I need to raise more money. So then Holdings went and raised another like 60 to 70 million dollars. Because when COVID hit and all the stimulus checks were coming out, everything's about timing. The first 10 million I raised was because farming was really good. The next 10 million I raised because the oil was good. And then the last big chunk we raised was because the COVID money, everybody had money they didn't know what to do with.
Yep.
And so that was the timing. So we raised it all. And that was actually the hardest time of my life because we raised all this money. We had a plan, we had the partner, we had everything. And then the interest rates went up and the world went nuts. And that was the hardest period of my life. We were fortunate that we had a few land guys and the construction company of ours was just getting started, so it wasn't fully staffed. And we had like 8 projects on the docket, so about 160 million.
Mm-hmm.
And all these land guys were going to get bonuses when they closed. But nothing made sense anymore with rates. So
Yep.
we had to cut them all except for a couple. And so we had a lot of cash. We had to make this decision. It was the hardest decision of my life. And it turned out to be the best decision of my life based on what happened after that.
Yeah. Yeah, very very interesting. So how do you making the decision of which projects to keep and which ones to cut loose? How'd
It
you make
just
that
had to,
determination?
we basically just said if cap rates are 6%, will we make money? Because
Yep.
they were 5 at the time, 4.8.
Yep.
And construction costs at that point were already pretty elevated. We had a project that we got opened up end of 22, which we got fortunate, locked the interest rate in at high 4s. But during that building period, that construction went up, about $1 million. So we basically said if construction costs still go up a bit and cap rates go up to 6, what works, what doesn't.
Mm-hmm.
And there was only 1 or 2 that did.
Has there been enough of a readjustment at this point in time to allow you guys to start buying again, developing again?
Yeah. So we started the year with like a $40 million pipeline, and now we're at a $200 million pipeline.
Hmm.
My goal is so pipeline is, it takes about a year to entitle, a year to build. So if you have a $200 million pipeline, it means $100 million under construction. My goal is to get to a $500 million pipeline, $250 million being built, $250 million in entitlement. So, I'm hoping we can get there in the next 20 months or less, but it's all deal driven. I'm not going to do a deal just to do a deal.
What has to change in the marketplace in order for you to achieve that goal?
I
Is
think
is it simply
people,
rates coming back down, or pricing readjustments, a little bit of both, a little bit or more than that?
yeah, interest rates are big. A big customer of ours is people buying and selling homes.
Mm-hmm.
So I think having rates come down in the 5s, hopefully some people buying and selling and moving again will help some rates just kind of stabilize and get a little uptick. I think people need to get a little more realistic with land prices. We are seeing, and there's also speed. So every single month extra that it takes to build something, well, the NOI in the future is, let's say, 200,000 a month. You can do a discounted cash flow formula to put the value on it today.
Yeah.
So we are seeing some subs putting a lot more people on sites and speeding that process up. Back when we built that one in 22, That 12-month project took 15 months. Well, now these 12-month projects may only take 10 just because we're seeing a little bit more subs looking for work, you might say. So it's going to come down to how quick can we build them, interest rates, rental rates comfortability, which is the buying and selling of homes and which ones don't have a lot of competition. And then also people just being realistic with dirt costs. Because in your IRR, if you have to close on a piece of dirt before you even start entitlements, you have to sit on it for 12 months. That's a big difference if you can get into contract and say, we'll close before we break ground. And we're seeing that a lot. So we might still pay about the same price, but we don't close for a year. And that money's in our pocket making 5% a T-bill. So all of those things go into it.
Yeah, very interesting. What markets at this point in time, where are you guys placing your energy and efforts? I know you mentioned Arizona. I know Phoenix. You guys are in Phoenix.
Mm-hmm.
Is there anywhere else that you guys are really excited about and have a hyper focus on?
We look for high barrier to entry in major cities. So we're looking in California. Gary's got about 80% of his hotels in California. What we like about California is nobody else likes it, and everything's for crazy. But once you get something built there, and actually California has a huge brush on it. Like California, don't go there. But we are building in Fresno's, Moreno's, all those kind of areas, and the land cost and entitlements and the construction are no different than Arizona.
Mhm.
It's the place in California that people from the cities are actually moving to, and we're finding good luck.
What do you find as far so like land price is the same, construction costs the same? Are you finding a premium rental rate per foot with the storage units yeah, as compared maybe to like Phoenix, some markets
Yeah,
of Phoenix that you guys are in?
great question. So in Arizona, same land cost, same bill cost, you're probably $1.50, $1.75. There, we're $2 plus all day long.
Wow.
We we're 28% IRRs on our California projects, or 18% in Arizona.
Interesting.
I mean, it is we in just Fresno alone, we've got, I think, about $90 million of projects we're in the works on.
Is from a valuation perspective, when it comes time to let's call it sell the entirety of the portfolio, and let's say 80% of it's made up of California assets, and the remaining 20% is Arizona. To an institutional play, obviously there's a good bit of cap rate compression and premium that you'll get for selling a large portfolio. Will you be dinged at all on the valuation given the concentration in the California stuff?
So California properties are actually a lower cap rate, usually just because it is so hard to build and you have
Mhm.
the rental rates. We're gonna try to group our stuff. So another thing that I learned, I read a lot, but I learned this from Gary, is when he sold a big portfolio of his in 2006 for a couple billion. And the problem is he had too much money to 1031 and or to invest intelligently that quick. So I think our model, and I think things change all the time, but my model would be to sell mini portfolio. When I say mini portfolios, I'm talking 150 to $200 million portfolios, selling those more annual. Instead of building a portfolio and having a $5 billion sale in 10 years,
Right.
my thought is to do $200 million portfolios. And I think I want to concentrate them on like Arizona. We've got over 100 million going right now. It'll probably be worth 150 here, went up and built and stabilized a bit. That would be a really good chunk because you want to be over 100 million. Same with the Fresno Moreno. Like there's a buyers that like areas. So my thought is a Fresno portfolio. If we own that market or a good chunk of it, I think there'd be an extra premium compared to if we have one in Fresno, one Moreno, one in Phoenix. I think that would actually maybe be a little less, but it just depends the buyer. You have
Yep.
one buyer that might like it, but a lot of people like to just own certain chunks, especially the REITs. In Fresno's a unique deal. Fresno is owned by Daryl Storage. This guy owns it, and his product, hope he's not listening, it's
I've
not
never
the
heard of
best.
Daryl Storage.
He
Is it
owns the
just
market there, just that
okay?
area. All of them
Interesting.
are Daryl, and they're not the best product. We're going to be the first guys coming in, and we're just going to build. We're not going to come in quiet. We're coming in loud. We're building 3 gorgeous stores scattered not far from his on all of them. The REIT names. It's going to be interesting to see how that works. I'll let you know.
Oh, that's funny. I love so literally, I mean, truly, he owns that market. I mean, he
Oh
makes
yeah.
up the majority of that market, his assets. Okay.
100%. Yeah, he's got like 18 facilities just kind of through that belt. Fresno, kind of just threw all those cities in there.
Yeah, interesting problem that you mentioned that Gary had when he sold a big chunk of his portfolio. You said he had too much money to invest
Yeah.
responsibly. It's I guess a good problem, but also still a bad problem to have, right? It's a billionaire
It
problem.
is. It's like too much grain in the grain bins, farmer
Yeah.
issues. And, too much capital is an anchor. And Warren Buffett says it too. The bigger you get, the harder it is to have high returns. And it's the luxury of still being small.
Yeah. Speak to me about some of the benefits that you have found. Obviously, Gary as a partner, incredibly healthy balance sheet. I mean, your balance sheet sounded as though it was very strong in and of itself, but just having that extra layer of strength, have you seen benefits over time from call it a lending perspective, even just giving you additional leverage? If so, how has that helped your business?
100, yeah. So again, there's things I'm not going to sit here and say I knew that things were going to go this way and banks were going to get tough on lending. I can't say I knew that, but it was very fortunate, just similar to the oil boom when I was younger. Getting Gary on as a partner for a lot of reasons, just learning mentorship, but also his balance sheet and being a PG on our loans right before
Hmm.
the banks went into basically their lockdown period was very fortunate.
Yeah.
And back in the day, we'd have to beg banks to give us loans. I mean, the first property we developed here, we were living in Fargo, and I was like, I didn't even whiskers yet. And I'm like, you had to beg a bank to give you a loan. It's like it's a lot different.
Well,
Now they
especially if you're
actually
not
call
living
you.
there local. I mean, lots of these,
Yeah, that helps
these
too.
lenders, they want you to be local to the market that you're developing in. I'm assuming, right? Especially if it's a local bank.
Yep. Yeah. So Gary's being involved on the bank standpoint, the financing. I don't even know what it would be like before, but now people are calling for the business, and it's something I've
Sure.
never experienced.
That's a great thing. It's a beautiful thing. So what does let's talk about the next call it 24 to 36 months. What does it look like for the growth of the company?
So we're looking at getting the self-storage business to, I'd like to get to the point where we're opening a new one every single month, a new $20 million asset every month, which gets to us that quarter billion number we mentioned, because they're about 20 some each.
What,
I'd like to get,
I'm
go
going to
ahead.
layer another question there, and I would love to know, like, what does that look like? What has to happen, or what has to occur? More specifically, I think from like a team standpoint, like what does your
Hmm?
company, who has to be hired? What does the infrastructure have to look like to accomplish that goal? You don't have to
Yeah,
answer that
great
right now. You can
question.
keep going. You're answering. I'm sorry to interrupt you. I just want to layer that in there
No,
because I'd love to, see the bigger picture.
no, great question. So right now we're at that 4 to 6 clip. And so we've got 6 superintendents, we've got 3 PMs or 2 PMs, they manage 3 each. And then we got a 3-person land team. And then we got the back office and construction director and all these things. So what's going to have to increase to go from the 6 to the 12? Because the 12 will go get us to that 500 million, 250 a year from the current 2 to 250. We're going to need another 6 superintendents in different regions, not just here. And then we're going to need to add a couple PMs. So that's doable because what you're seeing is you're seeing the construction jobs decline and we're sitting here inclining. So we're actually
Yep.
we're catching a lot of talent that's looking for work. So again, it's all about timing. When you're looking for money or you're looking for people to help build your business, it's all about timing. So the timing for building a construction team is now. So we're doing that.
Yep. Yep.
And then on the land team, my goal is we want to implement more technology. My goal is that the same 3 people can find, vet, and underwrite double the sites without another person. So we're bringing in a lot of AI, any technology we can find. That's my goal because our overhead. So right now we do a $20 million building. Our net profit per facility is about 450 to 500,000 for Abernathy holding investors. I think we can at least increase that by 50% if we can double the volume per site. If we can double the volume and keep our head count. We don't need another CFO. We don't need another construction director. We don't need another me. We don't need another, right? So yes, we need more supers. Yes, we need a couple more PMs. Other than that, I'm really hoping we can do it all with just
Mhm.
class A people on our
Yep.
bus.
Yeah, and you made a good point. I mean, we're experiencing the same thing with just being able to attract some amazing talent and pluck them from companies that are retracting or have been
Yeah,
retracting since rates started going up. So now's a great time to hire. We've added some just stellar talent to the team over the last 18 months, and so again, even probably have overhired in certain areas, knowing that we're going to grow into it, but take it while the taking's good, right? Bring the
exactly.
talent on when the opportunity presents itself. So no, that's fantastic. But I'm excited for all your growth that you got going on. Lots of exciting things. So for those that, I mean, for those that are kind of tuning here, want to learn more about you, reach out to you. Just stay up to speed with what you guys have going on over there at Abernathy. What's the best place to find you, reach out to you, make contact with you?
Yeah, so we've got, Abernathy Holdings is our holding company. And then from there, you can see our subsidiaries. So you can Normand Equipment, Abernathy Development, which is our self-storage. You can kind of get involved. You can kind of see all their links to their pages. And then abernathyholdings.com. And again, you'll find my personal contact and all that through those two sources as well.
Yeah, fantastic. I guess the last question I have here before we wrap it up, I meant to ask this earlier. I know that you're married. You've got 3 kids, correct? 3 children, young
Yes.
children.
Yep.
Talk to me about the balance, managing the balance of all the above,
I,
and still being a present father and husband.
yeah, I, so I met my wife when I was 20, got married when we were 22, had our first at 23. And we have 3 boys now. The youngest just turned 3 a couple days ago. Up until 2 years ago, as a father and a husband, I was always good and I was always there, but I wasn't there. I give myself a 6. I have really found balance the last 2 years. I finally started eating right and working out and being a really good father and a really good husband, and I'm really proud of that. And I
Mhm.
give myself a 9 now. I think a 10 is pretty tough to do, but the balance, you know, I don't know the answer. And the reason I say that this whole thing in the story is because I think we're all trying to learn, and every day's a new day, right? Like I'm not just going to be a 9 for the rest of my life. Oh, we're good. I can check out. It's a daily thing. It's a
Yeah.
day. So I just try to wake up. I spend time with the kids in the morning. I
Yep.
work out. I come to the office and dive in and dream big and talk to everybody, fix problems, firefighter. And then I pick my kids up every day.
Hmm.
So every day I just say, if I can do these things, my 5 F's should be in balance. And I've been doing a really good job at that. And then surround myself with the right people to encourage that character. Um, that's how I've done it. I mean, I know it's not like some genius formula,
No,
but
it's simple.
it's
You
working.
know, it's the KISS method, right? Keep it simple,
Yeah.
stupid. Like it really,
My
you
dad
don't
always
have to
told
overthink it, right? Just be present. Be present for all those that are in your life. I mean, I think that's summarizes most of it, right? To a certain degree. Just be
me. Yep.
present for your kids, for your wife, for your immediate family, for your employee, for everybody in your life. But finding that balance is the difficult portion of that, and not getting over concentrated in one specific area. You
Yep.
get, and I don't think you could ever be over concentrated in the family side of things. In fact, most
Yeah.
it's always in the business
What
side,
is it?
right? And the family side is always a side that tends to suffer, unfortunately. And but
Yeah.
again, you're 30, you're young. It seems like you got
Very.
it pretty damn figured out and dialed in. So I think a 9 is very respectable, my friend.
I want to keep
Andrew,
that.
always a pleasure having you on, man. Always fun chatting with you, catching up, and uh, looking forward to hooking up again at some point in the future. I know that you guys, I know, speaking about self storage, so I know that we chatted about this as well, and maybe this is another show. But interestingly enough, Andrew's actually one of his colleagues. I know quite well, buys mobile home park. Well, he used to own mobile home
Yep.
parks, now owns them again, and they're actually seeing some distress opportunities, just like we've seen in the last year or so, and they're starting to buy mobile home parks. But maybe that's for another show.
Well, we
Maybe
got
we'll
to
talk
leave.
about
Yeah,
that
we're leaving
another
everybody on a
time.
cliffhanger.
Yeah, that's
Yeah.
right. That's
We'll
right.
just leave it at this. We are about to close on an $18 million portfolio, and we're looking to add. And I'm excited to update you more on that on our next
Good
show.
deal.
Come on.
Awesome, buddy. Well, Andrew, until then, you take care, my friend, okay?
Thank you. You too. Appreciate it.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.